Hi there, I'm Tony Sycamore, Senior Market Analyst at IG in Australia. Well, last week we saw US equity markets rediscover that bull market mojo we saw into the end of last year. And that was supported by increasingly aggressive expectations of Fed rate cuts and expectations as the Q4 earnings season kicked off. This week, we're scheduled to see earnings reports from companies including Goldman Sachs, Morgan Stanley, Interactive Brokers, and also Charles Schwab. Aside from those earnings reports, there will be interest in the latest retail sales report for December, the Michigan Consumer Sentiment, and speeches from Fed members who may attempt to push back on expectations of rate cuts starting as early as March. Let's take a look now at the chart of the S&P 500 and the Nasdaq to see how things are looking chart-wise. At the beginning of the year, we spoke about some rejection, this sell-off, which potentially alluded to the possibility of a completed five-wave advance. Here's your wave one, your wave two, your wave three, your wave four, and an Elliott wave, wave five. The push to marginal new highs last week doesn't negate the fact that we're in or possibly tracing out a wave five. And in Elliott wave theory, a wave five high generally is then followed by a corrective pullback. If the S&P were to break below this 46.82 low on a sustained basis, I think that would confirm that we've completed a wave five high. Bearing in mind, we also have this bearish divergence on the RSI. You can see that the RSI is ticking lower as the S&P makes new highs, and that would give the S&P 500, I think, probably a catalyst, if you like, for it to pull back towards 45.50-ish. Turning to the Nasdaq 500, well, what a fantastic chart this has been for us. The pullback into the second half of 2023, the subsequent rebound to new highs, which we called, and then, of course, we're also looking for a wave five high, potentially in the next, at least could have been this point here. Potentially, we might see a marginal new high here. We don't know the answer to that yet. If the Nasdaq were to break below this low here, coming in around 16,334, then potentially that would be confirmation that we have completed a wave five high. We also have, of course, this bearish RSI divergence, and that a pullback is underway in the Nasdaq. In terms of how far the Nasdaq could pull back, well, you have some support coming in around 15,800-ish, all these this congestion period over here in this 15,719 high. And then if it was to break below there, I would probably expect to see it retrace towards a 200-day moving average, which is coming in right now at around 15,050. So what we're waiting for now is still confirmation that this up move from the October lows is complete in both the S&P and the Nasdaq, and that a pullback is underway. In terms of what that means for our view of the markets, we are neutral or cautious, in other words, given the fact that we do think this rally is at the final stages before a pullback. Now, when we say a pullback, we're not talking about a reversal. So I do hasten to add, a pullback is a correction or counter trend, if you like. So again, it's different from a reversal lower. We certainly aren't calling that. We are calling a corrective pullback in due course. Thank you for listening and have a good week ahead.